All right, welcome everybody. This is Eric here with Investor Central Club and Stacks AI Software. We're doing our weekly closing bell live stream coming from you here in San Diego, California. Max will be joining us in just a little bit. Your favorite analyst and Trades and Gains, unusual trades. If you guys are here in our live stream, go ahead, leave me a comment Stacks so I know you're here listening. Gonna go over some things that are coming up. I know we've got a big one. Oracle comes up in terms of their earnings at the end of today's close, so we're gonna jump right into those, discuss a little bit about what we see here on the tape. First off, what I want to do here is go over our flow scanner for today. So we're gonna pull this up over here. Our flow scanner down on the bottom. Let's just go over and double check what it says in terms of just today. We're seeing a little bit of bearishness. SPY's been playing around with that 600 level. You can see it's got about a 2-to-1 ratio in terms of today. 27 million puts to about 14 million calls. MicroStrategy, look at that, 28 mil to 200K. Well, that's a very, very bullish, bullish sentiment over here in terms of our MicroStrategy, which is basically Bitcoin when you consider it right now. Tesla also almost a 5-to-1 ratio, 21 mil to 4.2 mil. Nvidia 12 mil to 7 mil. IWM just about even right here. QQQ a little bit more bullish than bearish. You can understand that probably has a little bit to do with that MicroStrategy and Tesla there leaning to that bull side. Also see Palantir. I think Palantir made some new all-time highs again today. 10 mil to about 600K. Very, very bullish there in terms of Palantir. One thing I do want to mention, I was hearing this thing about how there is a possibility, Palantir has contracts with our government, but they're possibly going to use Palantir's technology to help monitor what's going on in terms of the riots and the protests that are going on. So I do believe that Palantir, we might hear about some sort of bigger government contract or, bigger deal that they get in order to deal with what's going on. Yes, it would overall bring more bullishness to the company. However, I will point out right now, they're looking at about a 500 PE ratio right now, which is quite ridiculous. So keep that in mind. There's definitely going to be a bit of risk with that position if you are looking to take that Palantir position. Apple about even. We just had their event most recently. Saw price kind of jump around a little bit. Didn't really do too much anything crazy. Apple didn't really. They've mentioned that they've had some issues with their AI, and at this point they're pivoting toward, I believe, possibly pivoting towards something in terms of some sort of wearable, some sort of VR / augmented reality type of thing. They released some stuff in terms of showing, all their apps and everything are now this glass transparent version of icons and things like that. So we'll have to see what happens with that as time goes on. Meta had been bouncing around their levels as well. 3 mil to 1, that's fairly insignificant for that company here. Amazon, a little bit more bearish than bull. But you got to keep in mind, when you look at these huge companies that have trillion-dollar valuations, market cap is, extremely, extremely high. These few $1 million aren't too much to really scoff at, so keep that in mind, okay? GLD gold, a little bit, definitely more bullish than bearish. There is, we did just have CPI. I'm going to have Max go over that for you guys. But, people rotating to that less risky type of investment with gold, trying to rotate out of things. XLF financials here, a little bit more bullish than bearish. Kava, we saw some unusualness with that. We'll discuss that in a bit. CrowdStrike, iBit. So one thing I like to do here is, especially as we get down to these where it's just a few mil, also FSLR, you can go ahead and filter for the puts and kind of get an idea. Okay, gold, Kava, Crowd, FSLR, Google, these are the ones that have more bullish to bearish sentiment going on right now. And if I just go ahead and reset this so we can get an idea of what's going on for the entire week, You can see Google, FSLR, ASML, Netflix. These are the bigger names that have a bit more of that bullishness. One other thing you want to keep in mind here is the frequency. How many of these prints are showing up? So this one, FSLR, having 7 of these in this contract. You can always click on it. That's going to put it up in your search bar for you and get an idea what exactly they're purchasing. So FSLR, just for Friday, they're expecting a pop. And we did see FSLR move a little bit. I'll pull up the chart in a moment. It jumped up a little bit, passed some resistance, and kind of came back down. But here we got 2 mil being spent over here. And again, it's continuing here. So I would not be surprised over the course of the next 2 days to see FSLR make a bigger move upward, if anything. All right. Let me double check on Max real quick. He should be joining us very soon. All right. With that being said, I want to get into this. We've got, let me pull this up. We've got Oracle reporting after. Oracle, tomorrow we've got Adobe and Restoration Hardware after close on Thursday. Those are probably the bigger names that you guys will want to take a look at. GameStop did report yesterday. We did a little bit of a bonus live session for you guys yesterday. Saw some stuff come in for GameStop. Unfortunately, those positions probably didn't pan out at this point. GameStop ended up dropping, but they had basically aiming for over 35, range to about 50 was the position that we saw for that GameStop. So again, make sure you manage your risk. Nothing here is ever completely guaranteed, but definitely we will say that Stacks does help improve those probabilities for your trades. Let's jump into Oracle, ORCL. So when we went into our chat yesterday, okay, so yesterday we had seen on Monday this big block of trades, all for 6/20/2025. All right, so 1.16 mil, 800K, 774K here, all aiming for Oracle to jump up over 180. We have a few of these 175 that are in the money. You'll see that gold medal over here on the right side. But the big money one's the most interesting one to consider. So they're expecting it to hold that 175 level, because you want to understand, if they're buying in the money, these are generally going to be a little bit more expensive than most, more expensive than those out the money options. And the return for those are technically going to be a little bit lower when you make the move, but they are safer options to consider. So they're putting that floor at that 175, expecting it to go up in the next week and a half, especially after these earnings. Now, what's really interesting is as we go into today, 11th over here, we start seeing some calls being sold, but especially here, we got this block of puts that came in. So they're aiming to below 160, 170. These are a little bit cheaper, okay? Real quick, let Max in here. So Oracle, definitely looking, we've got a little bit more bearishness that just came into the markets here. And you guys got to keep in mind, they're playing the other side as well. But as we're going into market close, we do see some more. Look at these short term, 613, 613. So just for Friday, they only got 2 days for this one. They're spending 160K. Again, comparatively to some of these bigger whales, bigger institutions, not exactly a huge amount of money, but again, still plenty of money to you and I. So again, Oracle, I would say yesterday going into it, definitely a lot more bullishness, but we're starting to see some bearish, starting to see both sides of it come in as well. And the one thing about the equity prints right here is this, we only see this one over here for 155 mil, came in on Monday, and we haven't seen anything else since, so that's something to consider. All right, Max, didn't mean to ignore you. Good to have you here today. Back to our weekly closing bell show. I hope you guys here are enjoying it. If you guys are still here, go ahead and comment Max if you love Max, because I love Max. I'm going to comment myself here. Max, our favorite analyst, Trades and Gains, Unusual Trades. He does a lot of the analysis. Anytime something comes in, he's right on top of it. Just like yesterday, we saw some Tesla options come into the tape while we were in our live stream, and Max was able to get that even analyzed and sent out for you guys in, as in real time. It's, you guys got to understand, he's putting in the work for you guys. And both of us, our entire team here at Investor Central and at Stacks, we want to see you guys win. All right, we want to see you guys, achieve that financial freedom, achieve whatever it is that you're looking for. More time with your kids, more time with your family. If you just want to go sit on the beach and drink a Corona, that's up to you. But we want to be a part of it. We want to be able to help you guys achieve that dream that you guys have. Max, real quick, just because I'd rather get this done before market close, what are your opinions over here on Oracle that you see?
So with Oracle, I was talking to Mihoff in the Discord earlier, and this is very much Cisco systems. If you remember, when we were talking about Cisco, the big risk is switching business models. So with Cisco, that big acquisition of VMware kind of drove the direction of where they were going to head in the future. And again, I like to say these are 12 to 18 month plays, but depending on when that purchase was made, that's going to help them kind of pivot. Because as we mentioned yesterday, Oracle's going from traditional hardware to now cloud-based infrastructure, which is always a huge pivot for a company, regardless of your market cap or how much money you have backing you. So I really think it could be another Cisco type deal where our parents are all invested in it. Like, they're not going to sell anytime soon. But they've also been through this before. They were a lead in product lifecycle management. So your Apple headphones, your Beats by Dre headphones, your Samsung TV, that was all managed by product lifecycle management via Oracle. They were not the leader anymore. Ironically, after my mom left, of being the VP of PLM, but like that might be a little biased, but whatever. So it's one of those things where, do you have true conviction in the long term? Because one thing you'll see with the earnings plays is long dated hedges against open positions. So if you see like volume is less than open interest, you can just assume that it's a hedge against a current open position they may have. Versus if the volume's greater than open interest, I know that is a fresh position because I know within probably a week, however many contracts they bought, that's what I'm going to see in open interest, because they're going to try to turn around and sell them. And that's why they're buying 50K, 15K, 20K contracts, because they believe that there's going to be a demand for that price point that they're buying in at. So expect significant dips, but I do think Oracle is going to be very much like a Cisco, where we're going to see a violent swing. I would say probably between a 10 to 15% in either direction move, because anytime in SaaS or in software, those companies, when they make a pivot to a new business model, in a sense, you're going to see some aggressive and nasty swings in either direction, where investors are either pumped on it or they're kind of bummed on it because they realize that they may get hosed going into uncharted territory.
Give me a second. My trading view is glitching out a little bit here, but I've got Oracle up on the screen. Let me resize that for you guys. Got Oracle up on the screen over here. You can see after the dips that we saw here after their last earnings, it's just shot straight up. Back down over here, it's up about 47%, almost 50% from where it hit its lows. So it's already run up quite a bit in terms of it. If you look at the big picture, you'll see a couple of our tech names kind of making this pattern right now. You had this big V-shaped recovery coming back toward and trying to attack those highs as we see again. Oracle, in terms of their numbers, in terms of their PE ratio, that's always one I like to look at. 41.62, still somewhat, somewhat high. I was telling people Max Palantir right now has got a 500 PE ratio, and it's still making new all-time highs right now. So kind of ridiculous. We'll discuss Palantir in a moment too. But Oracle here, basically half a trill right here, 500 billion market capitalization, huge company. It really will just come down to things that we've continued to say over the course of these earnings reviews that we have, is that whether their outlook for the upcoming, their forecast, market forecast, are they willing to give an idea of what things are going to look like in the upcoming years, upcoming quarters? Are they going to hold off? I do believe a lot of the most recent tariff news stuff that's kind of blown over for most of these companies, and Oracle isn't something that's going to be as reliant upon that type of the supply chain and things like that. So do we see them go up? Do we see them go down? I would definitely say on Monday I would have been more bullish on it. The most recent prints have a little bit more bearishness to it. So when it comes down to it, earnings plays like that, I like to kind of take a seat on the sideline, just because there is, we have seen this huge pump up to the top. If you guys, let me move my face real quick here. On the bottom side of this too, on the bottom you'll see that this is called the slow stochometer. What it does is when you go up high and when you go down low, you'll start to see how price moves in the other direction. So I'm going to make a quick mark here. When price is at those highs, price is at those lows, you tend to see a reversal of sorts. And right now we're hitting that, starting to see that green highlight at the top. We've had quite a bit of a run up. Doesn't mean we can't go a little bit higher, but it just means that the risk right now is more so to the downside in terms of what this has to say. And this is on the weekly, all right? If I drop this back down to the day, you'll see, same idea. A lot of this in terms of very high, this is the overbought territory, meaning that there's a possibility that we could see this come back down before it heads up further. So earnings could be great. You could see a bit of a sell-off, and then you could see it head up higher. A lot of the short-term, let me pull this back up. In our stack software, you can see, right, Oracle is starting to show a little bit more of mixed sentiment, especially as we go into this close. But we'll stay on stream here with you guys through the market close to take a look at that. I definitely would say, if you're able to do so and you want to take this type of position, it wouldn't be terrible to try to see if you can take both sides, but be careful, especially as I see over here, some of these puts already have 111% IV. Some of these calls are already well over 100 as well. So that's where you got to be careful. But another thing to think about is they're still willing to spend 150, 160K on a position for that. That's only going to last till Friday, and if that doesn't work out, they're shit out of luck right there. So keep that in mind.
I mean, I can tell you right now, just looking at the chart, if you look at it on the 5-minute from the last week, we have really heavy accumulation zones at about 174. And then we also have even bigger accumulation zones at about the 170 level, down to 167. One thing I don't like, because the indicator I use can give you up to 10 days of prior supply and demand. There are some very big gaps between, like, the previous day demand, for example, sitting between 175 and 174. If I'm looking at the 4-day prior supply, we're looking at 172. If we're looking at the 5-day prior supply, we're looking at 170. If we're looking at the 5-day prior demand, we're looking at 167. So there are some very big gaps below this. Again, this is a very much buy, sell the news type of situation. They are making some new investments. They're sitting on cash. If anyone can read a balance sheet, you can see that they're a little bit top heavy in terms of what can they really show during earnings that would push the needle in the right direction. But again, it's a position change. It's a pivot from a strategy standpoint. So like you have to keep that in mind with especially with earnings like this because there are people who will blindly throw money at this because they see a 5-year vision or they see a year and a half out vision of where this could go. So they're buying the hope versus buying the reality of the news. So that is just one thing to always keep in mind because there are some very big gaps of accumulation below down to 167, what I'm seeing right now.
Yeah. It's just the way that it's run up. One of the things I would actually, so we got Daniel Garcia asking, should we do a long straddle? My suggestion right now, with the IV being so darn high, I would try to avoid this just because
Yeah.
the expectations are already there. So that, you've got two possibilities. Your IV is super high. It does go in one of the directions that you want. Let's say you go with calls, it shoots up. The puts obviously are going to lose out, but then you're going to have to deal with the IV crush. The other side of it that could possibly happen is maybe it just chops around. Maybe it doesn't go up or down. It kind of just bounces around. IV is going to crush both of those contracts, both up and down, and you're going to lose out on both sides of that contract.
Yeah.
One of my actual suggestions here is take a look at these earnings patterns that start to happen. Okay. So, for example, here, you got to start planning out, looking ahead at what earnings are about to come because you see this giant run up. And the thing is, nowadays, with everybody understanding what's about to happen, people are expecting earnings to come. These are scheduled events. So people are already getting in ahead of everybody. And a lot of times with certain companies that have a lot of hype, that have a lot of, good future possibilities, what will end up happening is people are all going to leg in on it early, and then it's just going to push price up. And even if earnings is great and it beats all expectations, that's already somewhat priced in, and it's one of those buy the rumor, sell the news type of situations, and you're actually going to see price drop after the earnings report. So a safer type of position, and we can, we'll take a look ahead a little bit further, is what companies are about to report. Where can we see that price is at a good level that we can start to buy in earlier and earlier at? And therefore, we don't have to worry about the IV crush and the earnings report. We're trying to get in early and try to sell off before that earnings report even happens. And whatever happens afterwards, you got to make sure you turn a blind eye to, because sometimes it does go up further, and you'll lose out on extra gains. But the thing is, we want to play the probability game. We want to play something a little bit more risk safe. And that's one of the things you got to understand about things with earnings is always going to be somewhat of a dice roll, a bit of a gamble. Even if earnings comes out great, it could drop. Even if earnings comes out terrible, you could see price shoot up. There are forces behind the market that you and I are not going to have knowledge about. The way the algorithms are moving, the big money and how they're positioned. One of the examples is Lululemon. Yes, we got insight on stacks as to what was going to happen with that price. It was still a bit of a gamble at the end of the day, but you have to understand Lululemon actually beat expectations for both of their numbers, but it took a giant drop because of the way that they announced their upcoming forecasts, and their the market sentiment ended up dropping from there. So just something to keep in mind. Okay. MSTR, yes. MicroStrategy has been making a run. I've had this chart up for a bit. As of right now, with the way that Bitcoin's moving, this is just it's the last point of supply area up at the top right here. We're just bouncing around until Bitcoin makes that move. You could see this hit that top, reject. Probably, I would expect this to do something like this, where we head up a little bit further, hit those previous resistances, come back, retest, and then possibly come up further from there. That's the
And
hope for a lot of people with MicroStrategy and Bitcoin.
and one thing you have to understand, like, yeah, that we saw a $20 million big money print, but they also paid $2,900 per contract to only net them 7,000 contracts. And mind you, the open interest is at 10,433 right now.
Yeah.
So this could very easily be like a double down into a position they may have previously opened, and that open interest is what their previous position was, and now they're holding on to 7,000 contracts, hoping they can pump them, and then you guys end up being exit liquidity. So like that's why like I always preach, make sure you're looking at the open interest versus the amount of volume. If it's kind of close, you can almost see that someone's going to rug pull you at some point. And yeah, again, the 390s for 620. We're seeing 7,000 contracts again at an 840 average. And what's the open interest on these? It's around 30K. Now, again, 620s, you have a very high chance of getting IV crushed. You have to understand when someone's throwing above 2 million into a position, a 10% move, 20% move for them is what's going to make that profitable and worth the risk at the end of the day. Whereas like a 20% move for you, if you bought one of these contracts, would feel like a drop in the bucket. So like you need to like the big money prints, they're great to follow, but like you need to also couple that with your risk appetite, because at the end of the day, for them, 25%, 30%, 15% is a win in their book. But that's because 15% on $5 million is what a small country's GDP could be for a year.
Yeah, and
So it's just,
another thing to look at, especially with these, you know, when you consider the amount of money they're willing to throw at it, one of those contracts for us is what, $2,000 to $3,000 to begin with, right? And that
yeah.
10% move for them is going to net them 2 to 3 mil. That 10% move for you is gonna, if you only can buy one contract, it's only gonna make you $200. And so it's always gonna be relative, and you have to understand, yeah, you know, who knows? Maybe that person's got $1 billion portfolio. $20 to them, or to 20 mil to them, is actually fairly small in terms of how much they're really putting into it at the end of the day. So definitely something to consider. Big money is a great tool to look at, but always consider context, and also take a look at their expected move on that. Okay, take a look at how aggressive that bet happens to be, because in this situation with this, their expected move, they bought in the money, guys, which just means they're kind of expecting that to be the floor. 380 is the floor, and they've got another month before that expiration is going to hit. So again, if that continues to go up, yes, their break evens at that 410 level, but if they make a significant move, if we see a pop in Bitcoin and a pop in MicroStrategy, they could very likely get out quick, and you know, before you even know it. So
Yep.
all right.
Turned and burned.
Two earnings that I wanted to go over, and then we just had market close. We'll take a look at stuff in a moment. Two things. We got Adobe coming in tomorrow after close, and Restoration Hardware. So ADBE, Adobe. Actually, not too much activity in stacks when you consider it. We've got some calls being sold, some calls being bought, and stuff that happened earlier last month. So nothing completely major for it. And this one, they bought for 2026. So nothing that really stands out to me. Same, the only purchase we see here, 151 mil of Adobe on Monday at market close.
Adobe's a slow mover, FYI. Yeah. It's another IBM Cisco Systems. I have, hold on, if you give me a minute or so, I have a report I kind of wrote up about like all of our notable earnings, at least for the week.
Yeah, as you do that real quick, Politician Tracker shows there was a buy just today, actually. 6/11/2025. Mark Wayne Mullen just bought 15K to 500K of Adobe. But take a look over at the insider trades over here. It's just been selling since April. just selling by everybody, especially the higher shares as well. Even in January as well, we see a lot of selling. It is important to kind of take a look at the footnotes and the references. Some of it's to pay tax liability. Yeah, most of it's to pay tax liability. But you do not actually see anybody really purchasing anything. We got the CFO, EVP and CFO back in March purchased a little bit at the 390 range. And as of right now, we're in the 400 range. But again, nothing that tells me, hey, like this is an earnings I necessarily have to play.
No, I mean, even with their expected, they're only expecting 11% year-over-year growth on revenue to 5.7 billion. EPS is only expected at 490, which was at 470 in the last quarter. If we're looking at the last quarter from Q2, they were only at 481 for EPS, so it's not even that much of an aggressive jump. Now, granted, their CFO came out last earnings and basically emphasized their ongoing efforts for AI through add-ons, though. And I don't know if any of you pay for Adobe. I do. I can tell you this much: I don't want to pay for anything else. I would not. I would very much go look for an alternative at that point. Yeah, to Eric's point, I don't think it's something you should really be looking at. It's gonna make a move, but at the end of the day, you're gonna feel better sitting on cash than you will potentially getting burned by playing the wrong side of this, just because we're not seeing a ton of activity. So that should kind of give you the sentiment and confirmation you need to understand, is this really for you, or is this really something you should be playing in the first place?
Yeah, it's two things. It's Stacks has very little information for you to hold on to here. Not, the other side of it is liquidity. If the big money isn't looking to trade and to get in or out of these positions, your bid ask spread, I've gone over this every single one of our live streams. Your spread's going to be too big for you to really, make a good impact in terms of what price you're getting out of as well. Yeah, they're going to take your money. You can go ahead and buy those calls or buy those puts, but the moment you need to exit, it's going to be a bit tougher. And again, it's a good company. It offers some great services, but we just don't see enough buying of anything on either side for us to say, hey, there's conviction or there's confirmation that this is about to head in a certain direction. So we'll sit on your hands. That sometimes on certain trades, it's important to make sure that you have the discipline to sit on your hands and just let that move.
Oracle's getting destroyed.
Yeah, let's take a look.
It just hit that level I was looking at too.
Just bounced around. Came down again. Went up.
Yeah,
Then
no,
came down.
it's gonna fall. I'll say it'll fall probably between 5 and 10%. Because it's what we thought Cisco was gonna do months ago.
Mm-hmm.
So yeah, like it's already at 170. Yeah, bye bye. Hello, 166. I will tell you that much right now. 166 is in play. 170 we just hit.
Yeah, it's gonna break that.
I'm telling you, whenever you see companies talk about a strategic shift, that next earnings play is going to be a 10 to 15% swing in either direction. And those are ones you just need to stay away from at the end of the day.
Okay, last one for this week is Restoration Hardware, RH. I do know that for a lot of the news that we kept hearing about it was, they're going to get hit by tariff news like crazy. So is it already priced into this? Is it already priced in for that last earnings that they had back in April? Or are we going to see additional pain to come for it. PE ratio at 51, it's fairly high, like I was mentioning. Yeah, you had this flag pattern that it broke down underneath of. The thing is, it's one of those situations where you definitely can see it come down further toward that. Ooh, that'd be ugly though. Back down toward 128. Then you got some previous resistances. 104 is that point of control when it comes down to the volume. It's got room to fall, but what you're looking for is if it can reclaim back over that 210 level and close up above that 210 level, that's where you'll probably see people have a little more confidence in it and buying back up as well. But it's a situation where you have to remember, you know, are we done with that tariff news? Is that over with, or is that really just getting started? And Restoration Hardware is going to be one of those companies that takes it straight to the face when you consider it. Let's pull up our stacks and see what RH looks like.
I mean, they're expecting a loss on EPS already. They're expecting a 9-cent loss, but well, this time last year they were at 40 cents, minus 40 cent per share, year over year EPS.
So I mean, we got some unusual purchasing earlier last week. This one in particular stands out to me. For this Friday, they're expecting it to jump up over 210, so to reclaim those levels. You know, maybe they report a situation where they're going to have better, you know, still have better earnings than what's expected. But at the end of the day, we're gonna have to see what, you know, it's another one of those ones where liquidity is probably not going to be the greatest for us. So we might want to stay away from the situation if possible. IV for that one's at 144% when they purchased last week. So that's already an indicator that, well, it goes both ways. Let's talk about that. When you see them still purchasing at that kind of a high IV, it does kind of give you this, okay, well, what do they know? Because they're not getting into this expecting to hand their money to the markets. They're expecting to make money off of that position. So if they're still getting at 144% IV, what is it do they know? They're buying this extremely short dated contract. In this situation, they bought 7 days. So last Friday they got in the morning and purchased at that price. Restoration Hardware is down since that, so this is already eaten, you know, what, $6.40. So that's probably down, if anything, down maybe half, down 50% is possible. But we do not see additional leveraging into more positions or more money spent. 320K, you know, who knows? Who knows what exactly is going to happen? Only time will tell. We'll get an idea as, you know, they report tomorrow. But this gives me the thought that it's very possible that their earnings aren't going to be as bad as they have you know, in terms of expectations, but not the type of risk that I want to take, because that very, very likely is going to go to zero if this doesn't move past that 210 price, and their break even's at 216. So that's a fairly high move.
Oracle's ripping 186.20 currently, by the way.
So it popped, dropped, and then popped.
Let's see. What's
Right.
the latest?
See how it moved in one direction and goes in the other. That's just, markets took the liquidity of these people that had their stop losses below that, took their money, took their shares, and decided to move it up in the other direction. So,
well, here's the catalyst. Oracle expects triple-digit multi-cloud, which guess what they're rotating into? Cloud infrastructure, revenue growth to continue in FY26. So they probably had a huge increase in terms of their expectations for FY26, especially out of their cloud revenue growth sector.
Cloud revenue went from 25% to 40%. Crazy.
Oh my God. Yeah,
I'm hoping those people that did get into Oracle tomorrow, make sure you go post those profits in our profit channel. I definitely want to see that.
That's
Again,
crazy.
with earnings, if you are willing to take that type of a risk, like I'm gonna tell you this, if I had gotten into calls and I just saw that initial drop, my hands would start sweating. That's why I try to stay away from some of these, right? And we got to see, does it hold for open? Does it stay up in these levels? Does it make that push past 190 is kind of the question. Because like what we said with Oracle in terms of what Stacks was showing, they went with a fairly, let's see, right? 175 bought in the money, 175 bought in the money, 180 is the one out of the money. So that's not the biggest move, but so what that was telling me, like I told you guys yesterday, they're not expecting this to shoot up like crazy past 200. 200, there's only one that was bought for 200. They're expecting that to hit that, 180 to 190, maybe peak up
Mm.
over 190 range was what the prediction I made yesterday. You guys can see right now we're trading at 185. We'll see if it continues to make another move forward. We'll see if their guidance and their earnings call gives it a little bit more steam, and I could see it probably hit that 190, maybe probably bounce off of it and see from there what happens. And tomorrow when market opens, you'll see what direction it actually finally takes.
Yeah, that conference call should give a little bit of a more clear direction as well, because that's where you can come out and make the claims you want to make in terms of an earnings report, but when it comes time to hop on a call with investors and board members where you have to answer to people who have real money put into it, a lot of time that sentiment can shift. So it'll definitely be interesting to see what kind of move this is going to make during pre-market tomorrow.
We got a request of Daniel
Ver-
Garcia, Verizon and Nike. So I just pulled that up. Verizon, just off first glance, not too much stuff going on in stacks right here. We do have some buying of calls, but look at the premium here, only 55K. This one 890K for September. That might be something worth taking a look at. OI extremely low here. Take a look at what was updated there for that. IV is low though, so if price is gonna move, it's gonna be, a slow price move here. Let's take a look at the chart.
it got hammered today.
What's the news?
It's probably just T-Mobile impeding. Because
No.
I saw some T-Mobile calls come through today
Yeah, I
through
saw that
Flow.
too. Yeah. Mm. Let's take a look at big picture.
Yeah, it's not the chart's not horrible.
It's not terrible, but guys, take note of this. Take a look at this chart right here. How many charts do you see that just did this? Where we had, are we going to consider this to be the tariff crash of 2025? And we're just going to go higher? Or was this going to end up being a double top that we end up bouncing off of? So that's the big question that everybody wants. If you got a crystal ball and can answer that, I'd love to know. But does it end up being a double top and we bounce straight back down and we have, consolidation in this range? Or do we start to see it blow off and go up top higher? One of the big things has to do with our money supply. Do we start to actually print more money, especially because right now we do have a lot of issues with the national debt? So historically, one of the ways that a nation deals with that is they just print their way out of it. But the issue that we're constantly fighting, everybody knows this, is we're fighting inflation. So
Hmm.
the Fed doesn't want that. However, behind the scenes, when you look at the M2 money supply, we actually are starting to print more money. We are starting to inject more liquidity into our system. And we are spending more as well. Okay, I get it. We're trying to cut the national debt, but until that actually happens, I don't believe it at this point. We've kind of backed ourselves into a corner, and even though we are the world's reserve currency, have been little movements away from it. And one of the fears is that, if you look at history as well, one of the ways that we end up avoiding those types of issues when people try to move away from the U.S. currency is we end up going to war. So there
Mhm.
is a lot of possibility. When will that happen? How will that happen? There's always wars going on and things like that, but there is this big fear of that could be the next trigger for the markets here, and it would probably cause another big crash and then start to slowly make its way back up or something like that. So again, I wish I had a crystal ball that I could tell you, but what we got to do here is we got to take a look at what our data says and give you guys what we see in terms of probabilities. Yeah, Verizon. What I like though about Verizon here, look at that PE ratio. When I come down just to numbers, 10.48, that's a solid PE ratio. I mean, people use Verizon, their cell phones, their communications businesses use it as well. They're, in terms of their earnings here, a lot of green in terms of, let me move our faces real quick. On the bottom here, a lot of green earnings in terms of beats. They pay a dividend. It's a strong company overall. And at the end of the day, you just got to consider what's possibly going to happen is we're just got to see how it deals with this bit of a wedge that it's in. Does it break up? Does it break down? It's going to have to retest these highs or these lows before it makes a move, and it's just got this range that it's bouncing off around in. So if you are trading options with it, be careful with your open interest because it is one of those lesser traded names as well. Let's pull up Nike. I love Nike because I'm a basketball player, but I will tell you this. Nike's big revenue comes from running. Okay, they're actually, in terms of basketball, they do have the biggest share in terms of market share. I think about 90 something percent of basketball shoes are Nikes. But one of the big things that has been happening, you'll notice if you follow the NBA, things like that, Adidas has started to capture a little bit of it. Puma and New Balance, even Skechers is trying to get into the game. But I will point something out. I've got my own little theory of it. If you look at some of the bigger names of certain companies, um, it could just be a numbers game in terms of it, but because Nike has so many athletes, and so when athletes do get injured, it's a small percentage of the people that are wearing their shoes. But I look at some of my favorite, players that wore Adidas. You look at Tracy McGrady, you look over at Derrick Rose. They wore Adidas shoes, and I do believe that the foam systems that they have, if they aren't switching their shoes out, and the shoes are built too low, it takes a toll on your ankles, your knees, your hips, your back. Eventually, you end up getting injured. And with Nike's got the Zoom Air system. I personally like that in terms of my shoe use, but look at Skechers right now and how Joel Embiid is the face of Skechers, and you know how Joel Embiid, he gets hurt every single year. So is it directly correlated? Who knows? That's just one of my personal theories when it comes down to it. And one of the big things that's happened over the course of the last, I would say, 5 years is you're seeing a lot of players start gravitating toward overseas and going to China to create their own brand, to start to promote something. So something like Dwayne Wade, Way of Wade, Li Ning, and Anta. You even saw Kyrie after he had all that, the issues, the publicity issues, the political situations that ended up forcing him out of Nike. He's now got his own line over in China with Anta. And so that's going to move a bit of market share away from Nike. The other thing as well is, like I said, running's the big part of it. Running, look outside. When people run, a lot of people in the running space, yes, Nike is a big part of the market, but you're actually seeing a lot of people gravitate toward Hoka and On. So those are actually the two new companies that have actually made a very big move in terms of grabbing that market share away from Nike. And then obviously you have the tariff news that hit. Nike makes a lot of their shoes over in Vietnam. What ended up happening as well is because, because we know that they're trying to make sure that China didn't start creating more companies in Vietnam to import from there to avoid the China tariffs. So you see a lot of this, the shenanigans where they try to, bypass certain tariff percentages by creating a different company, creating in different countries because they have a lower tariff threshold that they would have to deal with. Another thing as well, yeah, Derek. Derek's one of my buddies from back at home. Known him since back in elementary school. He's a big shoe head, and he said Jordan Brand expanding more into lifestyle, other non b-ball sports, and they're upping MSRP. Yeah, they already did. I think, Jordans used to be around $100 or so, and now they're trading. You have to buy a brand new pair of Jordan ones for 165 to $200. A lot of inventory sitting due to higher price points, higher cost of goods. Yeah, so again, Nike's got a lot of these headwinds. That's the way I would put it. And you can actually see it in terms of what's going on. The call put ratio is already fairly even, but you've got a lot of people buying puts for the upcoming months. These are fairly small premiums in terms of it, but then you do have, right, you got them selling these calls. Yeah, it's one of those situations where Nike did real great during during COVID and during that huge run up in terms of a bunch of money and influx into the markets. You saw a lot of goods doing well. You saw people buying Rolexes with their stimulus money and buying, the Jordans that they wanted. And Nike upped a lot of their production. But one of the things that also happened was that they went direct to consumers. So a lot of people are buying from their website, from their app. You've got the sneakers app where you got to wait in line and try to buy from there. But another thing that also happens with that is people bought their shoes, meaning that they set up these automated bots on Discord and other systems where they go and they buy all that inventory, or the ones that are being sent to Foot Locker and to the other stores, they're being backdoored, meaning that the people who know these, the managers and know the people that own the stores, they're getting these shoes sent out the back door so that they can go make a profit in the secondary market. And so while Nike is making the money selling and selling out on those shoes, there's a very large inventory of other shoes, especially you can imagine if you go to these clearance stores that are all over California, you go to the outlet stores, there's a lot of shoes sitting, guys. And so overall, Nike's got to figure out that strategy and not rebrand themselves, but they got to figure out what they need to do in order to recapture that part of the market. Their new CEO is trying to take down inventory levels, so maybe better numbers in the upcoming year or so. Yeah, but even if they decrease their supply, they still got to make sure that the demand is still there, right? They got to still make sure, and a lot of, as I've gotten older, yes, I love my Nikes, but yes, I'm also looking at shoes that are going to be more comfortable. And another thing is, after having a kid too, I don't necessarily want to spend $180, $200 on a pair of running shoes just to go walk around in, right? And yes, they are fashionable. Yes, they are, something to be admired in a sense. But if at the end of the day I want something comfortable, there are shoes out there that I can get for under $100 at this point, right? So yeah, I'd rather be in slides. Honestly, I wear my Birkenstocks the most, right? I wear my Birkenstocks the most. I'm in those probably 80 to 90% of the time. So yeah, they're trying to bring demand back, but we got to see what they end up doing. Nike, let's pull up their chart as well. Yeah, Nike's struggled, especially with tariff. We got this. It's starting to look like that market cycle that I've shown you guys over and over and over again, right? Wonder where I had that specific pictures of Peloton. Yeah, this one right here. Let's pull that in. NKE Nike. We are seeing the market cycle of Nike. And so, have we hit a bottom? I actually think we probably could see this come down back toward 48 to 50 before we start to come back a little bit in terms of it. So this might be something where, long term, yeah, Nike's probably going to figure something out. The thing about stuff like basketball and things like that. So when we had the Olympics, they always do a picture of all the athletes together, and the photographer is even given instructions to make sure that they hide all the non Nike shoes behind the Nike shoes to make sure, because it's sponsored by Nike in terms of it. So a lot of things we got to understand. You know, they do have the market. They do have a lot of market share. Will we start to see other company, if we do see these other companies start to rise a little bit more, and they don't really make a pivot in terms of what they're trying to do in the company, we could start to see additional struggle. But you know, this market cycle, it's right on track in terms of it, guys. When you take a look at that.
Yeah, I
Yes,
mean
StockX.
they've lost they lost out on Cooper Cup.
Yeah.
If you want an indication of how well the company's doing, go look at the last 5 years of NBA draft picks and tell me how many of them are with Nike.
Very good point. Very good point. And another
Because
thing too, the NIL deals that you're seeing too, a lot of
play a factor.
players are signing with other companies. They're getting sponsorships from other places. Cooper Flag was forced to wear Nike due to the fact that he was a Duke player, but he's sponsored by New Balance,
Oh,
right?
and the only reason that happened is the easiest example of that, Andrew Wiggins. Andrew Wiggins literally made his college decision based on the shoe company. Because if you looked at his final three, it was Nike, Jordan, and Adidas. He ended up going to Kansas. Why? Because Adidas told him as soon as he graduated and was done with college, they had a shoe deal waiting for him, but they just needed him to wear Adidas shoes throughout the year to get people excited about him being the number one pick in the upcoming draft.
Yeah.
So it's as simple as that. Nike, unfortunately, they used to be a basketball company, and then they started losing out on top draft picks because those companies had more money that they could throw into a basketball department that was pretty much non-existent, so it was risk-free. You have to remember companies like New Balance, Puma, the reason they can sign these crazy deals to these kids, because mind you, they're kids, it's because they aren't, that is money they're willing to burn on an opportunity to get a Kyrie Irving, to get an Austin Reeves, to get whoever. So with Nike, I think my conservative right now for it, first level of drawdown is going to be at like 58. Second is coming in at like 54. And your bottom, I'm calling it 52.
Yeah. I mean, there is buying in the past over here in that range, so definitely as well. Um, like I said, time will tell, but they've got a lot of headwinds up against them. And yeah, Derek, you're right. They had a presentation for Stephen Curry.
Uh-huh.
Steph was ready to sign with Nike. Apparently, they reused slides and reused the presentation that they used for Kevin Durant, and had forgotten to take Kevin Durant's name out of the slides. And they also mispronounced it. They called him Steven or something like that instead of
Yep.
Stephen Curry. So ultimately, Steph moved over to Under Armour, which again, Under Armour is not doing great either. But
No.
Under Armour, and he's now created his own brand with Under Armour, and has it, you know, just like how Jordan is to Nike, Curry brand is to Under Armour. And
For the
yeah,
record,
it's
he was never going to get his own brand at Nike. So that was another big deterring factor. Is
yeah,
LeBron brand was being built. It was kind of the staple, the Jordan brand of kids who were born past 1990, basically. Um, and Curry was never going to get that type of deal done at Nike. It was only going to come from a company like Under Armour, who's willing to, again, have the capital to burn to take that type of risk.
yeah. And Nike athletes are tiered too. So if you take a look at their basketball shoes, same with Jordan, they have different price points that they put them in, and they kind of forever are left in those ranges. So
Yep.
LeBron's your top tier athlete, right at number two. You technically have Jordan in between because again he's not playing anymore, but he's got a lot of shoes that are sold in that $180 range. Then underneath there, you got KD, which is being sold at the $150 price point. And then you have all these other smaller names. So you got Devin Booker right now. You got Ja Morant. It used to be Kyrie Irving, where they would be sold at that $100 to $110 range. And you know, that's how they capture the market, because some people don't go in there necessarily to uh, purchase due to just performance of their shoes. A lot of them is that they focus on, okay, well, I've got this budget for my kid. I'm willing to spend $120 for their shoe for basketball for this season. What are my availability, opportunities and availabilities for those? This is the stock that they have, and so they purchase some of those. Yeah, they gave Nigel a line, the BMXer. They now have more Nike SBs and stuff. They're expanding in that sense. But just in terms of the basketball side of things, because Max and I are big basketball fans and
Yep.
basketball lovers, is again, they have their system, but a lot of people are starting to move away from that system. And as you know, I would just say Anthony Edwards. I don't necessarily love his shoe, but he's, I coach middle school basketball. Half my players wear AE ones, and a lot of kids are starting to move away. I actually have a couple kids that are buying Way of Wades now, because those are now considered the best and the top of the line, best shoes to wear. So just something to consider is, Nike's got that struggle ahead of them, and it's going to take some time for them to, if they need to recapture the market, it's going to probably make this little bit of a cup, and before it heads further back up. But we do see how it looks exactly like this psychology of a market cycle. Nike, it's happened already, so keep that in mind. All right. Yeah, we kind of went off on a tangent there, but that's fine. I wanted to pull up Palantir real quick just to show some numbers. Palantir is making new highs. I was telling the chat before you joined, Max, that with these riots slash protests, I want to call them protests, but there's a lot of social media talking about how they're riots. Palantir is making new all-time highs. One of the things that I heard about it was that they want to deploy Palantir's technology to know who's at these protests and who's at these riots. And that's where a bit of their technology can become useful. They do have government contracts. A big part of this huge run-up for Palantir has to do with that as well. So keep in mind that if they do get more money, it's going to come from the government. But at the right here, the thing that I don't love here is that 576 price to earnings ratio, right? That PE ratio. That's ridiculous. That's crazy. It takes 576 years of owning this stock for their earnings to make back what their price is right now. That's what that means. Okay? 576 years. None of us are going to live that long. So overvalued in terms of those calculations, yes. Could it go higher? Absolutely. That it doesn't have to be rational at this point. It is mostly going to be pricing in what people expect for the future. So if big government contracts are coming, billions and billions more dollars are going to flow into Palantir over time, you could see more people continue to purchase into it. But my belief here is that something's brewing with it, where you do see some politicians purchasing. Let me pull that up real quick.
Well, also, you have to understand, right now, the majority of their revenue is based on that government contract coming in, right? But you also have the commercial side that's going to eventually adopt this software as well. So then that's where it propels it to be another NVIDIA or Circle, to talk even about recent examples, or even CoreWeave. As soon as that commercial sector opens up for your Fortune 500 and 100s, 50s, Palantir goes easily. It easily skyrockets and goes to a split within the next 5 years.
I can see that. Yeah. Insider trades got a lot of selling, but these are like RSUs, automatic sales, Some, let's see, this one related to a series of transactions. They acquired rights to shares of it up front. So
Interesting.
yeah, insider trades, a lot of selling. That's what it has to say. So they could possibly look at this as, I mean, it's a great place for them to sell their stock at a very valuable price. Politician tracker, we did have a couple of buys as well. Recently a sell, but all earlier in the year at this point. But yes, all through 2025. Make sure you guys can see that. Yeah. Anything else we've got to go through? Let me see on my chart too. If there's anything else you guys want us to go through, go ahead and comment. Let me double check if I think I overlooked something up above here. Kava and C. Sorry about that. Sova. Let me go through that right now. Kava.
We had an unusual buy today on
Yes.
Kava. That was pretty big. Yeah, 2.64 million on the $90 calls for December 19th of 2025. I don't think that's insane, if I'm being honest. Because if you look at the chart, I would say, yeah, about $90 is where we saw the last big like accumulation zone before it completely sold off into the $76 area that it's in.
Yeah.
Because even now, if you look back, like in April, on April 21st, we saw some heavy accumulation at the $78 zone before it had another leg up. So if anything, if you're looking at this from a long-term perspective, it's just creating higher lows for itself. Because we have to remember at one point in February, we were looking at about $139 a share for this stock at one point.
Yeah, it's already, I mean, since IPO, it's up quite a bit. Definitely hit some highs back in late 2024. It's come back down. If it does complete this head and shoulders pattern, we could see it come down a little bit more. PE ratio is kind of high, 65, but they are, they're a fairly new company. There's a lot of people that love, I look at it as it's the Mediterranean Chipotle. And if you take a look at how Chipotle is, they're set up very similarly. So down the line, could it do great? Yeah. Another thing to take a look at over here on the left side here is on the bottom, we do have this possibility where we are seeing it fairly oversold where it's at, especially on the daily. On the monthly or weekly, sorry, as well, we're starting to see it peak up a little bit. So, does it reverse back up? That's a possibility. But the thing you want to keep in mind too is if it drops down to that 73 range, you have this big gap on the right over here in terms of volume. Yeah. Very quickly could see right under 70 before you see some volume of that. So there's a lot of buying in this range between this 72 up to about 97. That's where the majority of buyers and sellers are. And right here, this line that we see here, this orange line, is the point of control, meaning that's where the most buyers and sellers happen to lie. So getting up above that is going to be critical for if it does want to move up higher. C, Citigroup. We did see some financial. XLF came in. So, we expect. Oh. You know what this kind of reminds me of, though? This chart kind of reminds me of Boeing.
I'm tracking those Z puts right now too.
Is it puts?
Yeah, we had a put we had an unusual put for 340K. 67.5 was a strike, currently up 6%,
Okay.
though.
Okay.
Uh, Average when we found these was 0.34. When I added them to my watch list, I got in at 0.33. So I don't know. It's another situation where we could be looking at 15K in open interest and no volume behind this thing. Um, that
Mm.
is one thing you need to understand with unusual positions when you see like 10,000, 15,000, whatever the case might be, for volume, you need to understand over 75% of that could end up as the open interest within a couple days. Um, but as long as that OI remains, you're in a safe place. As soon as OI drops, that's when, as bad as this is to say, that's when you start to panic because that's when your spreads become very unprofitable and you potentially losing a lot more money than you intended to. But yeah, that's the only thing we saw on C today. I alerted that out on the TNG channel, I think earlier as well.
If you're looking at just the pattern of it, it's definitely got a bear flag look to it. Big picture as well. You've got the market cycle showing out again as well. This drop was ridiculous back in 07, 08.
Mm.
So, you know, banks, financials, what happens with our money system? Are they going to be struggling a little bit more, especially right now? Um, as we raise our interest rates and things like that, a lot of it's dependent upon that. So, if we see a rate cut and things like that, yeah, this could probably do a bit better. But as of right now, there's a lot of banks that are, you know, there's a lot of news about how the banks are going to be struggling because of all that. So, another market cycle chart for you guys to look at.
It doesn't help that the LeBron James of banking just basically announced his retirement to Jamie Dimon.
Oh, he's retiring? Okay.
I, well, they have no succession plan for him right now either
Hmm.
for
That's
JPM,
crazy.
which is I think they announced it, but also like people aren't very happy about it. But yeah, Jamie's out of the game, so if that's any kind of indication of how financials are doing, that is a man who had a very stress-free job to a degree, because he was held in a certain light. Him exiting is a very good indication of where banking could be headed at this point.
We've got Baba, you guys are asking about. I still stand by the chart I have here. Let me get rid of that on the right so you can see it better. Accumulation zone. Back in the beginning of the year, we got in before this huge pop. Right now, again, it's still in this upper level, upper channel, and considered that a sign of strength when it shot up, and you're in this last little bit of consolidation. It's going to take a bit of this little triangle that's happening and forming before it very likely down the line can head up further. PE ratio for it is fairly good too, 16.31. So, if you've got time to hold on to it, I think Baba down the line could be headed up further back toward that 160. We also have this big giant gap that still hasn't been completely filled too. So, something
Yeah.
that could happen with that. PDD, very similar in terms of that type of chart as well. Um, broke out of that lower accumulation range, chopping around up in this higher range. You could consider that to be a reaccumulation. Um, you know, China's got some issues with their system as well. They could also possibly print their way out of it too. So, only time's going to be able to tell with this one. But in terms of their PE ratios, though, that if you're a fundamental long-term investor, these are the times for you to get in on these types of positions. PDD at 11.03. Like look at Palantir, 570 for a P ratio, and you've got PDD here at 11. Okay, and I get it. There's a lot of negative news when it comes down to China and things like that, but a lot of these companies make good money, and their revenue, their bottom line is solid. So, keep that in mind when you look at those PE ratios. If they're going to continue to grow, they're going to continue to bring in that revenue. That PE ratio eventually is going to start to inflate, and so the price is going to go up. Was there anything else? Oh, I'm gonna update you guys. We saw NU take a big jump today. I know we're in this for our 1K challenge. That position is down, I think, close to 20, almost 30% right now. 20, 25%. Didn't quite hit 30 just yet. Was there any sort of reason for NU to jump up? No, it was just price action. What you see here is you had this triangle that was being formed, and while we were trading near the bottom of it, while I was expecting it to break down toward the bottom side of it, we shot up the other way. Okay, we'll see if we go up higher. I will let you guys know, are we going to get out of that position, or are we going to average down? The thing I will point out here is because we're starting off with such a small account, there is a likelihood we might just eat that $70-$80 loss there and then move on from there. But the thing is, we want to keep an eye out for our stack software to see what exactly is going on with NU, because those puts that came in last week, they're all clustered together, and they are aiming for September. Okay, so if we continue to see bearishness in these, and we didn't really see any real bullishness, to be honest. We got these two sell of the puts, we got this one buy of calls, and that was for 69K. Okay, so you got to keep in mind all these ones right here. This is a big block. I think we calculated it was close to what, 500K in terms of money right here. So they're not expecting it to go to zero. They're not trying to, they're going to get out of these before that type of thing happens. So, we'll keep an eye out for this. I still believe that my Wyckoff chart still has a bit of validation to it. So we're just going to have to wait a little bit for that. Max and I are also going to let you guys know we're used to seeing some of these positions have a drawdown of 30, 40, 50%, sometimes even more, and then boom, once the news does hit, once we do see that whatever news it is that these were purchased upon, once it hits, you'll see all of a sudden that position is going to go well into the green. But sometimes we've said you might have to take a punch to the mouth for a little bit before you see that happen. And that's just something with this new account challenge and this 1K challenge. We only have so much to work with, so we just got to be patient, or if you're one of those people where, I hope it's not the case, you're doing this 1K challenge with your rent money, I would prefer you not, and get yourself out and make sure rent's paid, because that's not what you should be doing. You got to go stack your cash and then try out our 1K challenge if that's you. So if that $60 drawdown we saw today on our 10 contracts, yeah, it's a 25% drawdown, but it was like $60 or $70 that we've lost so far, guys. If that's making your hands sweat, you got to go make some more money, and you got to go do a little bit more learning before you do this, because that's, I don't want to put you guys into that type of position. There is a possibility it'll go down towards zero. We're going to try to avoid that, but at this point, we do not see anything that tells us we need to get out of that position and change our thesis as to what's about to happen. So keep that in mind.
And to give you perspective of a live example, yesterday, so I added Palantir 138 calls based on unusual activity I saw. This is something I didn't call out, but at one point, those contracts were down 56%. And if you follow me on Twitter at Trades&Gains, you'll see that today we touched 265% from our original entry that we made on June 4th. So Palantir, like, that is an example. Texas Instruments, that's another example. I got dragged through the mud by online forums and just people telling me I was wrong based on what the chart was saying. But I also had a belief that this guy at tech that through 234K was not willing to lose that 234K going into TXN. So sometimes like you might think that it's a loser. Like I'll give you another example. Google. I made a call out for $200 calls about what, a month and a half ago. Those have been losing for the last month and a half. But guess what? Yesterday, you could have sold them. The entry was $3.20, and you could have exited at 685 yesterday multiple times for an over 100% gain. So you need to understand that, like, unless myself or Eric come out and explicitly say we're getting out of this, a 30%, 40% drawdown is not something that's going to shake us out, because guess what? A 30 to 40% surge is not going to make us sell part of that position either. So you have to look at it both ways. Like if you're up 30%, 40% on NU, are you selling your position yet? No. Because what are you waiting for? You're waiting for that 100, 200% deal that's going to hopefully come. So if you're not willing to take the plus 30%, then you should not be willing to sell at a minus 30% drawdown. If anything, you need to scale in and out appropriately so you can average down, or you can manage that position appropriately so then you don't get wiped out, or you're not like, okay, well, it looks like I'm not trading now because I have to go stack money. Um, so again, that's where a little bit of the psychology of the game comes into play, is as much information, data, resources, analysis that you can read. At a certain degree, it's going to come down to discipline and understanding, like, what is your risk tolerance and how can you mitigate your risk tolerance by giving yourself some extra capital to average down if that is needed. Because again, a big catalyst for these positions myself and Eric are going to look at are they are in Q3, Q4 of 2025. So we're talking September to December to February for some places that their fiscal ends in March. So it's just something that you guys need to be cognizant and aware of moving into this, because you have time on your side. In the options contract game, time is your best friend. So that's all I'm going to say about it, because I saw some people in the Discord asking about it, and I promise you, like, we're not putting you guys in a position to make these go to zero. This is just based off of like patterns we've seen multiple times. These are based on analysis that we've done multiple times over similar prints. So it's a thesis that we're trying to play out, and the money that we're putting up is money that we're willing to risk to potentially go to zero if it doesn't play out. Now, granted, to Eric's point, we're not going to let it get to there, but there's always the possibility, especially when you're trading options, for that to happen.
Another really quick thing to consider, because I'll pull it up on mine. Take a quick peek over at the open interest and the volume. So here's another thing is, one thing we're going to consider is the open interest on this NU position is at 70,000 right now. 70,000 for that open interest. I don't know if you guys can see that. 70,000, okay? Right down, right there. 70K. Look at that volume. That's how many were traded today. So yes, it dropped because of those, right? But that volume, we did not see people trading to get out of it. That open interest is still there. They're still open. Those contracts are still there. So yeah, if we saw suddenly 70,000 contracts, or in this case, we'll count up how many total there were on stacks over here for all those puts, right? You got 4, 4, 3, 3, 3, 3, 3, right? And 2, or basically 3. If you take all that and add that up, and you start to see all that volume disappear, show up, and then that OI disappears by tomorrow, that's your indication that this whale or whoever had that information, they're now out. They're no longer trying to risk that money, but there's still people in it. Okay, so if you had a bigger account, things like that, maybe you would even look to possibly average down in this type of position because the open interest is still there. They're still riding it out. Okay. Um, the other one, Wolf, WULF, popped yesterday, went a little bit higher. Hasn't really made too much of a move. We didn't see anything really happen today in terms of it. We're still going off of all these and the unusual calls that we've seen. Yes, there's some smaller numbers. And I also, somebody commented in our chat afterwards, after our live stream yesterday, something about Wolf declaring Chapter 11 bankruptcy. Max and I both did a little bit of a deep dive and looked at some news and looked at what we could see. There's nothing about that. So if you are listening in and can point us in the right direction, where did you see that news? Give us that link so that we can do a little bit more research into it. But I don't see anything about that. And so the ones that we got into are these ones for November of 2025. I got in at about a 78. I think they're trading at 80 right now. Popped up almost at 80, 88 or 90 yesterday. But they're basically back to almost even for me right now. If you were able to get in at that 70, you're still looking at right a 10-cent gain for each of those. We got 5 contracts, so that'd be a $50 gain at this point. But again, we're looking for a bigger move, so we're going to take some time with those.
Yep.
All right. I just want to jump right into this. What did I say earlier about Oracle? Oracle is going to go and make a test toward that 190 range, right? 190 was the round number I was looking at, but actually, if you take a look at that second bounce, right here, that's what 190 was at. So it peaked up right above it, bounced right off 190. Now it's fluctuating between that 185 and 190. What did I say, earlier during this live stream, guys? Is that's going to be where we see that bounce, and that's a lot of what our stacks analysis has let us know is that, hey, they weren't expecting it. There's one guy that decided to buy the 200 up and higher, right? 200 calls. And so this one, again, I expect it to probably chop around here. We'll see what happens during open. Does it make a little bounce a bit higher? I'm hoping those people, again, like I said, if you're in on those calls, take your profits when you can. If you absolutely have to leave a runner, if you're one of those people that gets a lot of FOMO and wants to see it go higher, yeah, you could maybe leave a runner. But I will tell you, Ivy Crush is going to take away a lot of that. Value of it, so be careful. If you bought that 180 right now, right, you can consider it's $7 in the money at this point. So your contracts at a minimum will be worth 7 or whatever, those 7 and 35 cents at this point. Plus a little bit of your extrinsic value, a little bit of your time value and theta. So, understand that usually in these situations with earnings, unless you see a strong move up higher in the morning, a lot of times you're gonna want to get out pretty quick. Okay, you're gonna want to get out pretty quick. Or if you've got 10 contracts, sell off 9 of them. If you get FOMO, take your profit on 9 of them. Let that last one run if you absolutely have to. But I would still probably even set a stop loss for break even or something like that, just to make sure that you don't lose out on those additional gains. If you guys are still in here on the chat, I know, let's see, we still got 10 people watching. I love it. Comment stacks for me so that you guys can let me know you're still in here. If there are any additional tickers you want us to look at, go ahead and comment right now before we end off. I was telling you guys as well yesterday, it is officially, I teach math and I also coach basketball. So a lot of it's after school type of stuff. I do a lot of trading during the day, do analysis for you guys. I'm going into my summer right now, so if you guys absolutely love this, give us some love, give us some likes, leave us some comments. If you're in the Discord or in Stacks, tell us how much you love us. I love to hear that. If you do, what we're going to try to do is Max and I are going to try to figure out what extra time we have, try to do additional live streams for you guys. Oh, very good. Very good. Let me go over FSLR. But we'll try to do additional live streams for you guys throughout the week, especially to go over anything unusual that we might have seen so that you guys can get in on some better positions and make some more money as well.
And talking about streams, by the way, Eric, I would like to announce that as of uh technically it'll be Monday, but as of Friday, I don't know. I feel like I should just tell my boss during our one-on-one tomorrow, that I will be leaving permanently and will be doing stacks analysis full time, and part of that will be from market open to market close. I'll be on stream on Kick, Twitch, in our Discord, on Twitter, and you guys will get to see my live reactions when I pull flow or when I'm like pulling analysis for these unusual kind of activity that's going on. So just to be aware, I will be a lot more online than I have been in the past, but that's because I'm going 100% in with Investor Central Club and doing analysis 100% of the time, Monday to Friday. So just be on the lookout for that.
I love it, Max. Um, Guys, I will tell you guys this. Ever since Max has joined our team, we're getting a lot more information out to you guys. Our YouTube has expanded drastically as well. I definitely, that's why I always ask as well. Go ahead, give us that like, leave us some comments, share with people if you like to, and help us out here. We do these live streams for free so that you guys can get an idea of how to use stacks, how we look through the flow, and analyze it. And we also do believe, with all of our heads put together as a community, we've got a lot more information to help each other out with. Just like earlier, Derek, one of my old buddies, is able to give us a lot of insight on Nike because he loves his shoes. He loves buying and reselling some of those things, and giving us those insights. We've got a lot of people here that work in tech, that work in certain industries, and being able to help us out with understanding how things work. Because again, Max and I will be the experts in terms of the flow, in terms of what we see on the charts. But a lot of times, if you guys have insights as to industries, because you work in those industries or you have experience with those industries, those are the things that really help us out. And that's why we love our community. We are a community of traders that wants, we all want to see each other succeed and to profit and to achieve that financial freedom that we're all looking for. Real quick here, we did see a FSLR Stacks AI print that came out a week or so ago, I would say. So if we're looking here at the daily, we did see a little bit of a pop. I think they got in a little bit after that pop. We are seeing us reapproach some of these, that recent gap that we just saw. We pushed down pretty hard from it today, but you would have, I think those positions got in around 7, and I think it went as high as 8 or 840 or something like that was what I saw earlier. So FSLR, I still do believe they've got room to go. Let me pull up our Stacks AI for you guys so you guys can also see Stacks AI right here. I think I had somebody email us that they weren't able to figure out how to get to Stacks AI. It's just the filter on here, and make sure that you check that off so that you can see it. FSLR, was it a Stacks AI one? Maybe not. Let me double check. I think it might have just been an unused.
I think FSLR was an unusual because I was tracking it
Here
yesterday.
we go. Yeah.
I was gonna say yesterday I stopped tracking it after it hit like 85%. Granted, at one point they were down like 50%. So definitely a
It almost was a Stacks AI print, I'd say. Right? You got
yeah.
all the signals that showed up. 60% expected move. OI at 1,284. We can double check that specific number now. They got 6 months on it, 260, it's trading at 160 right now. So quite unusual. And the other one previously as well, down for August, 180 or higher. So you do have a couple of layered in here, and then you do see additional big money calls, and look at this. Last 2 days, all we see are buys, for a lot of them more short term as well. So you see this for Friday. That gives me an indication and a thought that, hey, there's a solid chance we could see FSLR take another pop before Friday, and maybe not necessarily into next week, because we see these all expiring on Friday. We do have a few that are going for a little bit further out. So could it be news? I think there could possibly be announcing something with that type of sentiment coming in for such a short term. So keep an eye out for
Mm-hmm.
that one. Oh, it is in Stacks AI. Let me double check real quick. Man, I keep overlooking stuff here. Okay, so it's FSLR, yes. Um, it was on here. Yeah, second line. Wow, how did I miss that, dude? Okay. Yeah, again, they're buying for that time. And those of you, if you haven't taken a look over at our Stacks AI backtesting, last month's backtesting is up. I've already been doing little bits of updates on it. I want to, I do want to reward you guys when I can during these live streams. I think next week I'll probably give you guys a little bit of an update on Stacks AI as well, just as a bonus. Um, a lot of times it's just me going through print by print, double checking to see. But we do also, let me just give a quick number here. I was looking over last month's back testing. We have a few misses that have now gone into the gray, meaning that they're somewhere in between 0 and 15%. We had three of them that are now in that range. Our hit rate hasn't technically gone up, but our average return rate has now jumped up to 60% from earlier last month. So, prints are going higher. So keep that in mind. That's what Stacks AI is here to do for you guys. Give you guys, give you guys some prints that you guys can follow a little bit easier because Stack's done that heavy lifting of analysis for you. And we'll keep an eye out for it. LEU as well made a big pop earlier today. ARKK, a lot of people already made about 60-70% on that. MRK jumped up. I think it's still fluctuating around 50% right now. Max mentioned the Google print, that one where it was down quite a bit but came back. So for some people, if you should not be going all in on your Stacks AI positions. I would generally suggest take a position of about half or a third of a basic position, and then what ends up happening is if you see it go down 30-40%, even 50%, average down on that position. And that way,
Mm-hmm.
when you see those pops, you get in and they go up much more, right? I know it's counterintuitive for a lot of people. Hey, I'm going to add to these losing positions that I have. But a part of trading is understanding that system that you've set up for yourself and sticking to that system. What ends up happening is you see this position go down, fear starts to strike. You very likely start to consider, should I get out? Should I save my money? Because if this goes to 0, I don't want to see that go and disappear. But in a lot of these situations, and you can go look back on our back testing, a lot of these end up going higher, and it just takes time. You just got to peek over at what the expiration date happens to be. And even in our Stacks AI backtesting, I'll even give you guys how many days does it take for it to hit its high. Those numbers are all in there for you to see. And if you're following us on Twitter, Instagram, and Threads, you can also see I've been taking a lot of those ones that we've seen, and it actually tells you, hey, they purchased these contracts. It went up this percent after this many days. And you have to understand, yes, while there are a few that go right up within the week, a lot of them are 40, 50, 60 days out before they finally go in the direction that they're looking for. SLV definitely has made a pop. DKS, Dick's Sporting Goods, after they had their announcement with Foot Locker, they dropped back down, and now they're starting to make a rise back again. QQQ's gone up. MSTR, that's where a lot of people are asking. Same with Baba. But look at where those expiration dates are. They're buying Alibaba for 2020, end of 2025. So they've got 6 more months for this to go up to that 160 level and range. UNH, United Healthcare, definitely they bought the dip right here, right as it dropped due to bad news and controversy with the way that they were dealing with nursing homes and things like that. IBIT, Bitcoin, right? ILMN, SMH, CTRA, XYZ. I'll go look at my previous backtesting. A lot of these actually have gone a little bit higher. And right now I'm waiting on this one, this Meta one. I didn't get in this specific position, but Meta's actually had quite a bit of news come out recently. They're trying to put together a super intelligence team right now. and they're trying to put together some of the brightest minds to help create super intelligence, whatever that means. I'm sure we're going to hear a little bit more about it. And I do believe that there's quite a bit of sentiment for that, because you can see how over the course of the last week, we've already seen billions of dollars being spent. We talked about it, 3.5 bill right here, just being spent on Meta in terms of equity. And we definitely could see this head up further in due time. So keep an eye out for that. Okay. Let us know if you made it this far, as well as give us some love in our Discord. Give us some love in the chat. Give us our likes and things like that. Give us our emojis. The more that we see, the more likely Max and I are going to jump on here more than just this once a week. Yesterday, I know we did a bonus because we had Oracle earnings coming up. Hopefully some of you guys took that position, because it's looking like it's going to be a profitable one going into tomorrow. So as always, I want to thank Max for everything he does. He's a very valuable part of our ICC and Stacks team. Does a great amount of work for you guys in terms of analysis. I hope you guys are listening, because if you just followed him over the course of the last month that he's been around, dude, you very, very, up very, very nicely at this point.
I was gonna say you're up a good amount, $100, right? If you put $100 into one out of every 5 of my plays, you're up at least $1,000, because I think I crunched the numbers, and every 9 market days, like every 9 days the market's open, I've found a play that's gone on average 700%. That I put, by the way, in my Discord channel. So it's not like a blind thing. It's like, no, it's there. That's why I'm starting to now, if you'll notice, I'll start to put out like what these positions are up, because I understand some of you might be taking them. So I want to give you that transparency of like, well, today you'd be up X% or whatever the case might be. So be on the lookout. Again, I'm going full time next week, so a lot more is going to be coming out. I got a whole lot of stuff that I'm working on. So
I do have a question here, Jorge. Do you guys have any course of trading? We do offer Investor Central Academy, which is a course that Chemo and I put together about a year or so ago. It is something that you can purchase through the upgrade chat link that there is. And it goes over all of options trading, how the markets move, little bits of strategies and techniques in terms of charting and things like that. So if it's something that you're looking at, you can email us at help@investorcentralclub.com, or if you are in the Discord, go ahead and message us in there. Max's Discord channel, if you go ahead and in Stacks, let me move this around real quick. In Stacks, if you go down to the Discord in here, and you take a look over here, TG Trades, down here is Max. He has updates as in terms of everything that he sees. Just like we saw yesterday, as soon as something hits the tape, he's on it. He's making sure that he gets that information out to you guys so that you guys can get into those trades if you're looking for them. And he's always going to point out the unusual things. He and I are always discussing on the side what we see and whether or not it's something that's worthwhile to share with you guys, because again, there's a lot of noise that comes out in here, and we're always doing our best to try to give you guys the best plays that we can find. Obviously, it's up to you guys to manage your risk. Please, don't risk the house, don't risk your rent money, things like that. But at the end of the day, if you're able to learn along with us and be patient on some of these plays that we have, especially back tested with what we have with Stacks AI and the unusual positions that he and I are looking at, you should be doing fairly well. So keep that in mind. We always love to see that being shared over in our Club Profits channel. If you've made some money, go ahead and post it in there for us. That way we get an idea that our work here is not being wasted, that you guys are able to eat off of the things that we're able to share. All right, last chance, guys. Anything last that you want us to look over? Otherwise, we're going to log off. Two quick two quick things I do want to announce. Number one, congratulations to Chemo and Kim for getting married. You guys may have noticed there's a little bit of a wedding. Here we go. For Chemo and Kim, they got married this last weekend, actually on Monday, down in Cancun, Mexico. Looks like they had a great time. I unfortunately couldn't go. I've got a newborn here, and we weren't quite ready to leave him home alone to go internationally. But again, Chemo, congratulations to you guys. Very, very happy to see that you guys had a great time, and it looks like it was a beautiful wedding. Another thing, too, as well, I'd like to give my wife a happy birthday. It is her birthday today. We're definitely going to go celebrate a little bit later, go out, go grab some sushi for her, which is her favorite. But yeah, with that being said, you guys, love to do this for you guys. Our closing bell is started off just as an idea of Max jumping on live. Now it's become a real thing, not only on a weekly basis. Hopefully we can get this to the point where we can do it multiple times a week. But it's all going to come down to your guys' viewership, and the more likes we get, the more comments we get, the more motivation and fuel that really does give us. Because with the internet, sometimes feels like we're shouting out to the void, but when you guys do engage and you guys have a little bit more participation with us, that's where we're able to understand it's not just going out into nothing. Well, with that being said, you guys have a great rest of your day. Those guys that got into Oracle, please share your profits tomorrow. If you are in stacks, you are loving what we do, go ahead and click on this store app reviews here. Give us a review on there. We've got 115 people that have already given us a 5 stars, so would love to see what you guys have in terms of comments and how you guys have profited from our software. Okay, have a great day, you guys. We will chat with you guys again hopefully very soon. If not, we'll see you guys next Wednesday. Have a great rest of your guys' day, and happy trading to you guys.